Afternoon to all. Very good afternoon to all. Very warm welcome on today's webinar on Intricacies in Code of Ethics with recent case studies. On behalf of Ethical Standard Board, I would like to extend my heartiest greeting to all the members, speakers, and the council members, Chairman ESB and Vice Chairman ESB, and other members for joining this webinar. Now I would like to invite CA Mukul Singhal from Ghaziabad to please give a brief introduction about our speaker, CA Singh Jain, of today's program.
Mukulji, you are on mute. Mukulji,
Chairman and RCM.
with vast experience and dedication to the field, he has been a driving force for the betterment of ICI community. His tireless effort to connect with the CA members and students have inspired countless individuals to strive for excellence. We are honored to have him lead us towards a bright future for ICI. Please join us welcoming CA Jagjit Singh Jassar, a true champion of our profession.
Thank you, sir, for giving brief introduction about Jagjit Singh sir speaker. Now, I would like to invite CA Dhruv Agrawal sir for giving a brief introduction about CA Mangesh Kindra sir, the Vice Chairman of Ethical Standard Board.
Good afternoon, everyone. Ladies and gentlemen, it's my absolute pleasure to welcome CA Mangesh Kindra, a distinguished member of the ICI. Currently serving as the Vice Chairman of the Ethical Standard Board of ICI, he has been a driving force in promoting ethical practices within the profession. As a prolific speaker, he has shared his expertise with audience across the country, inspiring and educating countless individuals. With over 30 years of experience in audit and taxation, his insights are invaluable. He has also served on various committees, contributing to the growth and development of the profession. We are honored to have him with us. Thank you.
Thank you, sir. Now, I would like to invite CA Mangesh Kindra sir, Vice Chairman Ethical Standard Board, for his welcome address.
Thank you, Rashmi. Honorable Chairman of Ethical Standard Board, Sri Anuj Goyal ji, who has been spearheading a lot of activities and initiatives in the Ethical Standard Board in the current year. The speaker for this today's program, Jagjit ji, the Mikasa Chairman, and I think he's also experienced in this field. Other coordinators and their friends. It's been a pleasure to be addressing this program once again. And Ethical Standard Board has been undertaking a lot of initiatives, which of course the Chairman of Ethical Standard Board will explain to you. But let me tell you that the Code of Ethics, which we have to implement in the right earnest, although the 2 CPRs have been made mandatory for Code of Ethics. But really speaking, a lot of things, because we sit on the disciplinary bench also, and when we observe, a lot of small things which we perhaps overlook, and in the hurry or in the kind of a spirit of doing the work for the service to the client, whereas we fall on difficulties and a lot of small such cases, I think our honorable speaker is going to take today. So Code of Ethics should not be, according to me, only for the purpose of listening to the seminars, but really it's something which also makes us the venturing into the practice area in a more effective manner. A lot of SOPs can be developed on the basis of the clauses of our Schedule 1 and Schedule 2. A lot of initiatives can be taken in the inter-office working of the chartered accountants and documentation, which will help not only in complying with the ethics, but also with the other compliances like the peer review and others. And therefore, it is very much necessary to know these provisions. And if we see our Code of Ethics in Volume 1 and Volume 2, the provisions perhaps just cannot read the provisions as it is. So it has to read with respect to guidelines, the directives of the councils, the various kind of regulations. And if we really go one by one, at a time, that you cannot just read an entire Code of Ethics in a day. And therefore, such sessions are very much relevant for the membership at large. I'm pretty sure this session is going to enlighten us all and will make us more aware about the ethical issues, ethical provisions which are there, and to overcome the issues which we face in our day-to-day practical life, and make us completely, what we can say, uh, compliant with the requirements of our act, regulations, rules, and guidelines, etc. So welcome once again. Thank you very much. And I think Anuj has been doing a great work in Ethical Standard Board, which can be percolated down the branches. Thank you very much. Thank you.
Thank you so much, sir, for your words of wisdom. Now I would like to call CA RP Sachan from Kanpur to give a brief introduction about CA Dr. Anuj Goel, sir, Chairman, Ethical Standard Board. RP Sachan, sir, are you there, sir?
I think you are on mute. Thank you. Hello, friends. It is my pleasure to introduce CA Dr. Anuj Goel, sir, a renowned figure in CA profession. As the current CCM of ICAI and chairman of Professional Skill Investment Committee, he has demonstrated exceptional leadership and expertise. His tireless efforts and contributions to various prominent bodies and committees of ICAI have made a significant impact on the industry. Known for his infectious energy and enthusiasm, CA Dr. Anuj Goel, sir, is a true inspiration to many. He is currently serving as a chairman of Ethical Standard Board and a convener of CDS of Board of Studies. His dedication to profession and passion for excellence make him an outstanding role model for all of us. Please join me in welcoming his accomplishment, professional and visionary leaders. Thank you.
Thank you so much, sir, for giving a brief introduction about Chairman, Ethical Standard Board. Now I would like to invite CA Dr. Anuj Goel, sir, Chairman, Ethical Standard Board, for his special address, sir.
Thank you, Rasmi Jasoria ji from Ethical Standard Board. We are having the presence of our Honorable Vice Chairman, our very prominent Central Council member and the past Chairman of the Ethical Standard Board from the financial capital of the country, Mumbai, CA Mangesh Kindre sir. A very big round of applause for Mangesh ji for being very active and contributing in a great way for the cause of the professor and helping the members as well as students. We are having the presence of our Honorable Nikasa Chairman. He is in another capacity today as guest speaker, CA Jagdish Singh Jaxji from the political capital of the country, Delhi. And he is going to take very important topic for the professor, Intricacies in the Code of Ethics with recent case studies. And I welcome our senior chartered accountant, CA RP Sachanji from Kanpur, CA Mukul Singalji, CA Dhruv Agrawalji, and of course our secretary of the Ethical Standard Board, Ashish Dhruv Bhatnagarji, and the thousands of members who have joined us, not only from our country, but also from other parts of the world, to this very important webinar on intricacies in the Code of Ethics with the recent case studies. And friends, we are trying our level best to see that how we can really do something very concrete to help out our honorable members who are the best accounting professionals, not only in India, but practically from each and every part of the world. If the member of the Institute of Chartered Accountants of India are the best accounting professionals, and we are supposed to have the best of the ethical practices as far as our profession is concerned. And I'm really very happy that with the help and support of Mangesh sir, we are at par with the International Ethical Standard Board, and we are trying to see that how we can have the best of the ethical practices in our country, and through this ethical standard boards, we are trying our level best to help out our members also, and whatever provisions are there which are not needed. We will try to see that how we can ease out, and how we can try to see that the chartered accountants as well as the practicing chartered accountants, the life of them can be easy, and how we can have those provisions which are redundant, how we can try to see that we can have the code of ethics in such a manner so that we can relax and can make the life of the members of the Institute of Chartered Accountants of India easy. They can breathe in a better manner, because we know that now the regulators are also after the life of the chartered accountants. The government is having great expectations. The stakeholders are also great expectations, and of course, the Institute of Chartered Accountants of India is also having great expectations. But within that, how we can try to ease out the life of the chartered accountants. This is also our motto this year. And with the help and support of Mangesh sir, who is a very, very prominent personality as the vice chairman, we will certainly like to see that how we can help out our members. Friends, today we will explore the word of ethical considerations within the framework outlined in Code of Ethics. Ethics says that always do the right thing even if nobody is watching you. I think that is very, very important. और कहते हैं ना, if nobody is watching, the God is watching us. Maintaining integrity is the foremost pillar for a professional. With a focus on recent case studies, we aim to provide valuable insights into applying ethical principles in the real world scenario. Ethical principles serves as the bedrock for ethical decision making in the accounting profession, guiding us through complex situations with clarity and integrity, and stands on the fundamental pillars of integrity, objectivity, professional competence, and due care, confidentiality, and professional behavior. Complexities in a profession arises with changing time and technological advancement. However, a professional is always expected to meet the expectations of the client and society at large by following the legal framework, moral essence, and practical considerations. The Code of Ethics is segregated into 3 volumes, while Volume 1 of Code of Ethics is conversed with ISB Code of Ethics 2018 edition. Volume 2 of the 12th edition is based on domestic provisions governing the chartered accountants, which helps the members to significantly improve their professional and moral obligations, as it gives insight into various norms, regulation, and case studies. And Volume 3 of the Code of Ethics is a case law referencer. It contains a summary of important disciplinary cases arranged clause-wise to bring out clearly the disciplinary cases that a member in practice and service should have in mind while performing their duties, which is available at the Institute's website. The disciplinary mechanism sets in place the actions which could set the precedent to fair doing for the new members joining the profession. Friends, a member is liable to disciplinary action under Section 21 of the Act if he is found guilty of any professional or other misconduct. A complaint of act or omission of professional misconduct under the dues to the Chartered Accountants Act is investigated and adjudicated under the provisions of Chapter 5 of the Chartered Accountants Act by the Disciplinary Directorate. And we are having the best of the resource person, our Asardar Sardar, the NICASA chairman, C.A. Jagjit Singh Jags, the speaker for today's session, who will present to make the complexities in Code of Ethics easier to understand, giving insights on different case studies. And I am quite hopeful, I am quite confident that today's session will enable the members to gain deep insight into emerging issues and how to tackle these issues. With the help and support of Mangesh ji, we are having a very, very important vision, CA Connect portal. And through this CA Connect portal, you can access this CA Connect portal on caconnect.ici.org. This is a portal for chartered accountants to be connected and get engaged professionally across India. It is an indigenous system of listing of chartered accountant firms and individual practicing CAs on the platform of ICI, And the objective of the portal is to provide an effective platform for listing. It will help the chartered accountants to showcase their firm to prospective clients. And our Honorable Secretary, he's trying his level best to see that how we can put each and every chartered accountant who is in practice without fail on this CA Connect. And by using the technology, by using the SSP portal also, we can import that data, and each and every member who is in practice can be there on the CA Connect portal. Members and firms otherwise also are requested to register on the portal to get the maximum benefit of it. The portal will help service seekers to locate CA firms as per the area of service, as per the location, based on the address of the chartered accountant firm. And key information which are displayed at portal to service seekers are area of specialization, number of partners, constitution of the firm, how old the firm is, preferred city of working, and the location. And for registration of the CA Connect portal, for the professionals have also to be registered, the clients can also be registered. First, the chartered accountants need to click on the register tab, the register as professional, enter the requisite details, enter OTP, set password. So it is a very, very routine thing. You can go to caconnect.ici.org and you will get the required information. And accordingly, the client can also get themselves registered. So it is an important bridge to connect the practicing chartered accountants with the prospective clients from each and every part of the world. So I will not be taking your further time, as we are very, very eager to hear our learned guest speaker, C. Jagdish Singh Jack, sir. I once again welcome all our honorable members from each and every part of the world. I welcome C. Mangesh Kindeji, our honorable vice chairman, R.P. Sachanji, our very prominent chartered accountant from Kanpur, C. Mukul Singalji, very prominent chartered accountant from Delhi NCR, Dhruv Agrawalji, and all our honorable respected delegates present here. I once again welcome Jagdish Singh Jaxji, and over to CA Jagdish Singh Jaxji, our honorable Nikasa chairman. A very, very big round of applause for him.
Thank you, sir. Thank you. I would say it's a big honor for me, at the platform of Ethical Standard Board and speak on this topic. That is Code of Ethics revised 2019 and the latest changes and of course the latest judgment, which I have to pick up for the benefit of the profession, pick up for the benefit of the practicing chartered accountant as well as for the industry person. Those are actually working in the industry, not as a practicing chartered accountant, but as an employee of the company. So before I start the content, which is very important to discuss through this webinar, my sincere thanks to the Ethical Standard Board of ICI, the complete team, very learned, very knowledgeable, very senior, and very respected, the Central Council member, CA Dr. Anuj Goyalji, the chairman of this Ethical Standard Board of ICI, and of course, CA Mangesh sir, the vice chairman of this Ethical Standard Board, and of course, the other team members, CA Ashish ji, the secretary of this Ethical Standard Board, CA Rashmi Jasoria ji, assistant secretary, and CA Mukul Singhal ji, for the wonderful introduction given by Mukul ji about me. So thank you, Mukul ji. Dhruv from this Sikasa actually, and Mr. Rampal sir from the other area, and all the technical support team of this Ethical Standard Board of ICI, because without the technical support, so these type of webinar without the technical help not possible. And all the present member, as mentioned by Anu sir, from India and from outside India, from all over the world, those are listening this webinar, because this webinar is very, very important to start the practice, to join the industry, being a chartered accountant. So that is a one good opportunity, the big opportunity in the world. But we have to comply with the code of ethics. We have to comply with the rules and regulation framed by the ICI. So as mentioned by Anu sir, just a couple minutes before, he has mentioned about the overall, the hierarchy, overall the designing of this code of ethics. The code of ethics actually divided into 3 volumes. The volume 1 talks about, I'm just taking 5 to 10 minutes on the basic knowledge of this code of ethics. That is very important to understand, because some of the members, they are looking for the answer of their query. They are just looking for the answer. They are not looking for the basic knowledge of the code of ethics, the basic knowledge of the law, which we have to understand to solve our each and every problem. When you understand the basic concept of the code of ethics, so we can solve our each and every problem related to this code of ethics. So that is why I'm just taking a few minutes on the basic content of the code of ethics. Then I will speak about some the fundamental principle, 2-3 minutes on the 5 fundamental principle. Then I would take the 5 threads, talk on the 5 threads of this code of ethics. Then I will take the recent changes of the revised code of ethics 2019, which is applicable or implemented from the ICI for the benefit or for the compliance purpose from 1st October 2022. And after that, I have, some of the recently decided cases by the disciplinary committee, by the directorate of, the disciplinary directorate of the ICI. So we will discuss this topic. We have, I would say, 1 hour and 30 minutes. And last 5 minutes, I will take the queries. If you will raise any query, if you want to understand something, if you have some doubt in your mind, you can ask your query. And of course, the technical team at the back end, they will pick your query and forward to me, and I will try to answer those queries within the time limit. So now, the basic thing is what? The code of ethics, the complete code of ethics actually divided into 3 parts. The one part is, as we call, that is volume 1, volume 2, volume 3. Volume 1 talks about the fundamental principle. The fundamental principle of the code of ethics. We have 5 fundamental principles. I will just explain after a couple of minutes. And how to comply with this revised code of ethics 2019, we have other sections. If you understand those sections, read those sections, then you can understand how this revised code of ethics 2019 actually apply. And then we have conceptual framework, some conceptual framework to understand the level of threat, to understand how to address these type of threats, and to accept those threats at the acceptable level, so that the materiality is actually, sometimes we are facing some issue with the client. We have some conflict with the client, and client saying to the statutory auditor, Mr. Singh, please sign this balance sheet. There is no any default. There is no any, the problem for the investors of this company. So being a statutory auditor, that is our duty to understand, to mitigate the materiality of the facts. If we can mitigate that materiality, it means the impact, financial impact of that I would say the transaction related to fraud. I would say some finding, which is, I have found during my audit of this particular company. So we have to mitigate, and we have to reach to up to the level of acceptable level. Then we can say the materiality impact is actually over. Now this impact is immaterial. So now we can give without, I would say the unqualified report when there is a immateriality. But when there is a materiality item is there, and that impact of that materiality is actually giving impact on the financial statement of the company, and when there is an impact on the earning per share of the company, so that is directly giving the impact to the investor of the company. So that is in the public interest, and being a auditor of this, being a statutory auditor of this company, so we have to qualify the report. We have to give the proper disclosure in the financial statement, so that the financial statement gives true and correct picture of the financial statement. If anyone want to invest a single rupees in that particular company and want to buy the share of that particular company, and want to become the partner in that particular company as a shareholder, so he can understand, or she can understand, investor can understand the actual impact on their investment amount. So that is the duty of the auditor, statutory auditor. He has to, or she has to give a proper reporting and proper financial statement. so that the financial statement can give true and correct view. Other person easily can understand. The investor can easily understand the balance sheet because you have a proper disclosure, the proper qualification. The bankers, they want to give a finance to that particular company. They can understand after reading the financial statement and the report given by the statutory auditor for that particular financial year. They can understand. Even the other government agency like the ED, like the NAFRA, like the MCA, even after reading the report which you have given to for the public interest at large, I would say. So the government department can easily understand what you want to say in your reporting about that financial statement of the company. So that should be give true and correct view of the financial statement of the company. So that is the big duty of the auditors, statutory auditors, of course, the shoulders of the statutory auditor. He has to, or she has to give a proper reporting with the proper compliance. He has to, or she has to follow the guidelines of the MCA, the proper disclosure as per requirement of the Income Tax Act 1961, as per the GST Act of 2070, as per the ICI guidelines and rulings, or as per the recent decision given by the Central Council member of the ICI, as per the requirement of the NAFRA, right? And as per the I would say the practical guidelines, the practical guidance note issued by the institute. So we have to follow each and everything to save our skin from this misconduct under this Code of Ethics revised 2019 of the ICI. So this is what, it's a big topic. It's not a small topic, it's a big topic. But if we are worried about this code of ethics, if we are worried about our profession, if we are worried about the image of the ICI, we have to maintain the positive image of the ICI. So we have to understand the each and every item, each and every clause, each and every word of this code of ethics to save our skin, to save the positive image of the ICI in the world. So that is the big responsibility of the chartered accountant. So we have to follow these. So now I'm just going with the proper, what I have decided to share the information about this code of ethics within you, in front of you, within the time limits. So I'm going to start with the 5 fundamental principles. So we have 5 fundamental principles. We all are, very much aware about this 5 fundamental principle. Very simple, very easy. We have read so many times, even at the time when we all has given, the exam of CA, in audit exam actually. So the very first fundamental principle is called integrity. And the meaning of the integrity is the practice of being honest and showing a consistent and uncompromising adherence to strong moral and ethical principle and values. So what is integrity? Uncompromised adherence to the strong moral and ethical principles and values. So means when you are going to issue any report, when you are going to sign any financial statement of the company, when you are going to attest any document, when you are going to report any, right, related to bank audit, your report, your audit report, your statutory report, your internal audit report, your revenue audit report, any type of audit, any type of, the certificate which you are going to sign, being a practicing chartered accountant. So that certificate should not, I would say, should not compromise with anything, any personal benefit, any threat, with the compromise with any threat. 5 threat we have, I will discuss after a couple of minutes. So if that certificate, that balance sheet, that report is not affected, not compromised by any 5 out of 5 threat, any one of the 5 threats. So we can say your certificate, your financial statement, the signed by the statutory auditor, or the any other document issued by the chartered accountant after signing, so that certificate is not compromised by anything. So that shows the integrity of the signing person, you know, the auditor. Yeah, that certificate is with the integrity issued by the practicing chartered accountant. Second thing, second fundamental principle is objectivity. When we talked about objectivity, one of the fundamental principle out of five fundamental principle, objectivity talks about the quality of being able to make a decision or a judgment in a fair way. It means that is not influenced by personal feeling or any benefits. So when something is issued by, something is signed by, some document, some financial statement, some any relevant document at public in the public interest at large, right? So that is not affected by any feelings, any personal or financial benefit, means objectivity, not compromise, straightforward. So that is called the objectivity. If we talk about third, that is professional competence, means the person who is going to sign any document, person must be a competent, must having the professional skills, must having the professional degree, must having the knowledge of that particular area. If I'm not a, suppose I'm not a chartered accountant and I'm going to sign any balance sheet as a statutory auditor, then I'm not supposed to sign these type of balance sheet as a auditor because I'm not a chartered accountant. I'm not being appointed as a statutory auditor of that company. But if I'm going to sign and I've signed that document, I will be responsible, not as a chartered accountant, but as a other person, you know. Even the institute, even that company can, you know, go against me in the court in the before the disciplinary committee because I'm not a chartered accountant. But if I'm a chartered accountant, I have the power, I have the, you know, this capability to sign that balance sheet as a statutory auditor. But if I'm working in the company and side by side, you know, I'm just maintaining my COP, full-time COP as a practicing chartered accountant, it is also a misconduct. So only the practicing chartered accountant having the practice certificate from the ICI can sign that balance sheet. But that person must have the knowledge of audit, stat audit, internal audit, normal audit, any other, you know, of course, I would say the different type knowledge in the field of income tax, in the field of GST, in the field of forensic, in the field of FEMA, in the field of all other relevant, you know, area. Because when we are going to sign the balance sheet of the limited company, the company which is listed as per the SEBI, as per the, you know, stock exchange, so we have to follow each and every area. We have to understand, we must understand, we must have the knowledge about the related area. Then we can sign. If we are just signing without taking knowledge, that can be a case of negligence. So we have to study schedule second, as mentioned by, you know, just a couple minutes before by Anuj sir. We have to schedule the second schedule, part 1, clause 7, that is called the negligence clause 7. Right? The person has signed the balance sheet without having the knowledge. That is a case of negligence. You are not understanding the importance of that document which you have signed at public large in the interest of public, because other person will rely on your certificate and invest some amount in that company. Maybe after 1 day, after 1 month, after 1 week, or after 1 year, he will lose that money and he can come against you in the court or can file the complaint to the ICI against you because the document signed by you and that person actually believe on that document and after that invested that amount in that particular company. And your report is not up to the mark. Why? Because you don't have the knowledge, but you have signed that document. That is why I'm saying it's a case of purely negligence. The clause 7, schedule second, part 1. So these type of cases we have, you know, recent judgment. so many cases related to negligence, so many cases related to the communication with the previous auditor that is related to, I'm talking about the clause 8 of schedule 1, part 1, part 8, right? Clause 9, schedule 1, part 8. You know, you are not being a statutory auditor, you are not communicating with the previous auditor. And simultaneously, that client is actually private limited company or a limited company. So there is a applicability of Company Act 2013, earlier the Company Act 1956. So as per the requirement of the clause 9 of the schedule 1 part A, we have to follow the compliance, the section 140 of the Company Act 2013, section 141 of the Company Act 2013, section 143, section 147, and some other related sections, we have to follow. Being a statutory auditor of that particular private limited company, listed company, unlisted company, any other company which is actually registered under the Company 2013, so we have to follow. So most of the cases related to clause 7 negligence, most of the cases related to clause 8, most of the case related to this clause 9. And we will talk about the other recent judgment that is related to other misconduct, whether talk about schedule 1, whether I talk about schedule 2. So part, in the schedule 1, we have the part 4, other misconduct. Schedule 2, part 3, other misconduct. Most of the cases related to these area. So in this area, we have to study more. We have to understand the concept. We have to understand the requirement of the ICI. We have to understand the requirement and the suggestion given by the government agency. What are the information? What are the principle? What are the requirement we have to follow being a statutory auditor or as a working employee in the company, but as a member of the ICI? We are working as an employee of the company, of the industry, big company, top industry, right? Working as employee. But side by side, we are also considered as a member of ICI because we are chartered accountant. We are paying the membership to the ICI and we are still member of the ICI, but not the practicing chartered accountant. So we have to study the section 360, the section 260 of the revised code of ethics 2019. That is very, very important. So I will take these type of sections. So to come to the next, we have done the professional competency and due care. Now the next one is confidentiality. If I talk about the fourth fundamental principle, that is what? The confidentiality, what the ICI has mentioned in this code of ethics about this confidentiality. Professionals should not share personal details about someone means about the client with someone. If we are sharing the knowledge of the client without taking the acceptance, without taking the permission of the client, that is a misconduct. We are not supposed to share the information, the secret information, or I would say the information which the client had shared with us. We cannot share that information with the other normal person other than the client or the person which is not authorized by the client. We cannot share the information of that client with the other person. But in the case of the information asked by through the court or through the regulators or through the income tax department or GST department, that is the duty of the auditor has to share that information with that relevant department, authority, regulator, or the court, any court, Supreme Court, High Court. So that is the duty of the auditor. We have to provide these type of information as per the requirement of the authority. So we have to follow this direction also. Last one is professional behavior. How to maintain the behavior with our team workers, of course, our team. So what the institute has written, the form of etiquettes in the workplace. So when we are working with the other employee in the industry, we have to maintain our professional behavior. No loose talking, no abusing language. So we have to maintain the distance, the male and the female. the other person. So these type of things, we have to follow, and to respectful, and the conduct should be right. How to treat the co-workers and the client. So how to behave with the client, how to behave with the co-workers. As a practicing chartered accountant, maybe you are one of the employer of your chartered firm. So when you are maintaining the staff member, so what type of conduct you have to maintain? That should be respectful. That should be respectful. You have to give the respect to the others member, then you will get the respect from the others. So we have 5 fundamental principles. The number 1, integrity, which I have mentioned, objectivity, professional competency, confidentiality, and professional behavior. Try to understand, try to keep in mind all the 5 fundamental principles. Now I'm just going to highlight 5 threads. And after mentioning these 5 threads, then I will come to the technical part of this program, which is very, very relevant and important to understand how, how the things actually give a negative impact in the financial statement. So we have to understand. But without understanding this 5 fundamental principle and 5 thread, we cannot move forward. Number 1, self-interest threat. So what is this self-interest threat? When I will discuss the critical issue and the recent judgment, then I will explain you with the help of the latest judgment what the complainant has filed before the ICI or before the ED or before the other FRA. And the respondent means the person who is the culprit. Maybe a practicing chartered accountant, maybe a person who is a member of ICI working in the industry. So how this self-interest threat actually give the impact to that particular statutory auditor in the life of statutory auditor, then I will explain in a proper way. So just a small briefing on this self-interest threat. What is this self-interest threat? The threat that the financial or other interest will inappropriately influence the professional accountant judgment or behavior. If you actually want to understand, then I'm giving just a simple example. So one day I went to this Jaipur area for this GST audit. I was just cross-checking the financial statement of that client where I visited, right, for the GST audit of financial year 2017-18 and 18-19 for 2 years. I was just checking the financial statement of the financial year 17-18. What I've seen in the financial statement, in the notes on account of that financial statement, the Mr. A, I'm not taking the name of that chartered accountant. I'm just giving the example with the help of Mr. A. So suppose Mr. A, the chartered accountant, has signed that balance sheet. And what I've seen during that audit, GST audit, I was just cross-checking this, the annexure part of the balance sheet that I've seen. I've cross-checked the list of the unsecured. In the list of the unsecured loan, I have seen Mr. A HUF given a loan of rupees 50 lakhs to that particular client. So if you have already given an amount of rupees 50 lakh to that particular client as a loan, as an unsecured loan, and on the other side, as an individual, you are working as a statutory auditor of that company, it means directly or indirectly, you have the self-interest in that particular client business. So that should not be expected from the statutory auditor. That is why we can say, when you have such type of interest in the business of your auditing company, then I would say that there is no integrity. Your report can be biased, means there is no any objectivity. So what is the self-interest threat? When you have interest in the business, maybe the financial interest, maybe the family interest, maybe your wife is also working there as a director, one of the director of that company. Maybe your family member having the share in that particular company, that shows there is a self-interest in that particular company. So these type of interests is called actually self-interest threat, which threat giving a threat to the statutory auditor. So we have to maintain, if there is any self-interest of your family member, or your interest is directly or indirectly in the form of individual, maybe that Mr. A from the individual account, from the saving account, given a rupees 50 lakh to that particular company, he's not supposed to sign the financial statement of that company because having a self-interest. But that person has given a 50 lakh rupees out of his HUF account. That is also a self-interest. His company, his family member, his other partner may be involved in that particular company as an investor, as a shareholder, as a loan provider. Then the statutory auditor not supposed to sign that balance sheet because that chartered accountant having a self-interest threat in that particular auditing client business. So we have to avoid these type of things. Either we have to receive that money, back to us before giving acceptance as appointed as a statutory auditor, or we have to take a decision. We have to resign from the post of statutory auditor, because when you have interest and you are going to sign and you have signed the financial statement, so that financial statement, I would not say giving a true and correct view of the financial statement. So that view is actually compromised with the self-interest threat, integrity compromise, objectivity compromise. Two things is actually compromised. So I hope now you can understand what is the importance of that self-interest threat, how this self-interest threat give the negative impact on the audit report of the statutory auditor. Second one, self-review threat. What is this self-review threat? I'm taking just another example. Self-review threat means when you have something, means, what we recently, there is a rule 11G talks about the audit trail. Some of the members, they have asked me, things up, can you tell me something about how to manage these type of things? So what happened? Now the rule 11G, there is a audit trail is there. We have a small client. So now our family member, they are maintaining the books of account of that private limited company. So how now we have to do, what are the things, so many things. As per the relevant section of the Company Act 2013, that section actually giving advice or giving a list of the activity which is not supposed to do or supposed to do by the statutory auditor of the company. The one of the first point is related to or talks about the books of account maintained, the maintaining of books of account. If you are a statutory auditor of the private limited company and you are also maintaining the books of account, then I would say it's a clear cut or a best example of self-review threat. What we have to study, we have to understand if you are actually maintaining the books of account by yourself, you are maintaining, and you are also doing the stat audit of that particular private limited company, there is a self-review threat is there. So we have to avoid these type of threats, because one person cannot enjoy two seats. You are already enjoying one seat. You are maintaining the books of account as an accountant or as a professional accountant. On the other side, whatever the working done by you, you are actually giving the report on your working. It's a self-review thread. One work is done by you, and on the same work, you are giving the report. So two work are not supposed to do from one person in the case of auditor, right? When you are working as a statutory auditor, you should not. You should avoid actually. You should avoid a bookkeeping or maintaining of books by other person like a part-time accountant. So that part-time accountant is maintaining the books of account, writing the books, and you are working as a stat auditor. You are working as a statutory auditor of that particular company. Then I would say your report is giving true and correct view of the financial statement because there is an integrity and there is an objectivity. But when you are writing the books or you are maintaining the books of account and you are also auditing, I would say there is no integrity. There is no objectivity. Maybe there is some bias. You have done some wrong entry and you are just accepting because you are the auditor. You are not giving a negative report on that particular transactions, right? So self-threat is there, self-review threat is there. Third one, familiarity threat. As an example, the institute has mentioned in this this familiarity threat. If an auditor is too personally close or familiar with the employees, officer, or the director of the client company, means you have a one private limited company and you have been appointed as a statutory auditor of that particular company, and the director of that particular company is actually your relative, your family member, maybe your mamas, maybe your chachas, maybe your in-laws from the family of in-laws. So with that family interest, with this family threat, because you have to maintain that family relation with that person, and on the other side, you are going to sign the financial statement of your relative, your in-laws relative, you're one of the family member. You have to maintain the relation. To maintain that relation proper way, you are just compromising the integrity. You're just, compromising the objectivity. Then I would say the report given by the statutory auditor is not giving true and correct view of the financial statement, because there is no integrity and objectivity. That is only due to the familiarity threat, because you are maintaining the family relation. You are too much worried about the family relation कि जो हमारे family relation है वो ना खराब हो जाए. It will not give the negative impact to the relations, the family relation. You are just maintaining. The first preference is family relation. The second preference is, okay, I'm auditor, there is no any issue because I have to maintain family relation first. No, your duty is first to maintain that integrity as a statutory auditor. Either you have to resign from the post of as auditor, or you have to mitigate, you have to reduce the threat at acceptable level, so that the materiality can be minimized or materiality can be up to the level of 0. 100%, the threat should be over, should be complete, should be 0, converted into 0. 100% risk should be converted into 0 after applying the remedies given by the ICI, right? Then we can say, okay, your signed balance sheet of the auditee company giving a true and correct picture of the financial statement. If you are just maintaining the relation first, family relation, and the second preference is the auditor responsibility, then I would say integrity compromise and objectivity compromise and professional behavior compromise, professional competency compromise. Right? So you can understand the impact of the threat, a different threat giving a negative impact on the 5 fundamental principles. Next one, advocacy threat. Very rightly, said by ICI in this matter, advocacy threat. Acting as an advocate on behalf of an audit client in front of the government officer, like in the litigation or like in the resolving dispute with the third parties. I have signed the balance sheet as a statutory auditor. And the same person, the statutory auditor, representing the matter before the income tax authority, before the GST authority, before the tribunal, before the court. But yes, I will mention just after a couple of minutes about this, the tax services. When I will talk about the tax services, that is under section 604, right? The subsection 604 of volume 1. Volume 1 of the ICI Code of Ethics Revised 2019. So when we are talking about the tax services, we are not supposed to represent that auditee client before the tax authority when you are working as a stat auditor of the company, that is from 1st July 2020 onwards. Or I would say the deferred provision implemented from the date 1st October 2022. You are not supposed to do two activities, as a statutory auditor or to represent the client before the income tax authority, right? That is permissible from the ICI only in the case of ITAT. So I will mention later with the proper provision. So that is called advocacy. when you are giving information of the client and you are supporting that information of the client, and you are actually convincing to the other person in favor of your client, that is called the advocacy. You are doing the goody talks about the client before the legal authority, before the tax authority, just to get the order in favor of client. So that is called the advocacy. You are doing the advocacy of the client. Maybe your client is wrong, maybe your client is on the other side, the negative side, but you are just appraising the things which is in favor of client. So you are advocating the client. So this is not expected from the chartered accountant. You're not supposed to do some activity or your conduct in favor of your client. That is not expected. If you are doing this, then I would say there is no integrity, there is no objectivity, there is no professional behavior, there is no professional competence. And you get. Last one is intimidation threat. When we are visiting for the bank audit, so while doing that bank audit, we got so many threat, directly or indirectly. This area is not good for the newer one. You know, this area is very, the blacklisted area, negative area. You should not be here for more than a day. So you just saying, Mr. Singh, you just finalize this bank audit today itself, because you have to leave this area before this today night. Otherwise, something will happen to you, which is not in your favor. So these type of threat we are getting while doing bank audit sometimes. So some of the areas are very dangerous. When we are visiting there as a statutory auditor for the bank audit purpose, then we have to save our skin and our life, because our family members are waiting for us. But the first preference is we have to follow the guidelines of the ICI. Being an auditor, being a statutory auditor, we have to give the MOC. We have to give a proper reporting with the proper qualification, with the proper disclosure. That is the duty that is expected from the statutory auditor. That is our moral duty. Is the first one is this, and after that we have the family. So sometimes we have to, we are receiving this type of threat from the market. That is called intimidation threat. So what we have to do, we have to look for the the proper timing and the proper way, but we have to give the proper reporting without any compromise, without any compromising integrity, objectivity, confidentiality, and professional behavior and professional competence and due care. So we have discussed what we have discussed, 5 fundamental principles. Now we have discussed 5 threat. First one was self-interest threat, self-review threat, second one, and then we have familiarity threat, then advocacy threat, then the intimidation threat. So now these are 10 things, are the basic things to understand the revised Code of Ethics 2019 in a better way. Now come to the 3 provisions, which are very important, and most of the I would say the queries which I am receiving from the practicing chartered accountant related to these areas, even from the industry person also, because one section is there. One section talks about this section 260 of the volume 1, that is talks about no clar, right? So these 3 principles are which are actually implemented from 1st October 2022. As we know, the revised Code of Ethics 2019 came into market and implemented from first. The date was the 1st July 2020. That was the date when the revised Code of Ethics 2019 implemented. That was the COVID period actually. And the major 3 provisions were held by the ICI, and those 3 provisions actually implemented or applied to practical life. That is from 1st October 2022. Those 3 provisions those were deferred earlier. The very first one is responding to the non-compliance with the law and regulation. In short, we can say, I'm repeating again, responding to non-compliance with the law and regulation. In the abbreviation, we can say no CLAR. No CLAR. No means non-compliance with the law and regulations. So that is already, we know that if we study this, SA 250. So something is mentioned there about these type of things. No CLAR, non-compliance with the law and regulation. So that's come in the market and implemented from 1st October 22 onwards. And the section is 260 and 360. 260 for the person, for the chartered accountant, those are actually working in the industry or those are actually in the service, but they are member of the ICI. They don't have the practicing certificate. They don't have the COP actually, certificate of practice. They are working as employee of the company, as a member of the ICI. So in that case, we have to apply the section 260 is actually applied. If we talk about 360, 360 is actually the section is relevant for the practicing chartered accountant. Those are actually providing a public servant like the practicing chartered accountant in the public. So 360 section is actually applied to those practicing chartered accountant in public. The second provision was the fees related size. Fees related size, the section is 410. If you study 410, then you can understand last time, the percentage was 15%, 15%. Now we have 40% and 20%. 40% in the case of non-listed company, 20% in the case of, I would say, listed company. Right? So we will discuss in detail. I'm just highlighting three principles, then we will discuss in detail. Third one was tech services to the audit client. And section is 604. If you study this 604, then this section will talk about what are the areas actually considered as a tech services to the audit client. And these type of services are not supposed to be expected from the statutory auditor of the company. Means when you are working as a statutory auditor, so you are not supposed to give or provide these type of service. There is a list of service that is not supposed to be provided from the statutory auditor firm. If you want to provide, then some remedies are available. What are those remedies? What are those, alternate given by the institute through this, the complete detail, the complete detail is already given by the institute. So these, documents is actually available on the Ethical Standard Board website. You can take this type of things from the page of Ethical Standard Board. You can download it and that is free of cost. But if you want to study, if you want to understand, if you want to update your knowledge, then you can download or you can read anything. Every information available on the ICI that is free of cost, that is for the benefit of the profession, that is for the benefit of practicing chartered accountant, for the industry person, for the student of the ICI. So that is your choice. If you want to read, if you want to understand any area like the GST, like the income tax, like the audit standard, like the FRRB, like, anything, assurance, social standards, forensic standards, everything is available on the ICA website. So what you have to do, if you are looking for these, three principles, the three provisions which earlier were deferred, now implemented from 1st October 22, you want to download it, then you have to visit the page, Ethical Standard Board. And you can download it from the, the button is already there. In the download, you will find everything. If you will face any problem, you can ask to the Ethical Standard Board committee, this board, the staff members, Ashish ji, and of course, Madam is there, Rashmi ji. You can take the help of them or directly you can, take it from me. Come to the next. So now I'm going to explain these three, the provision which earlier were deferred, now implemented from 1st October 22. So first I'm going to take 410, fees related size. So major things which the institute has mentioned in this notification, this clarification, what they have mentioned. Yes, this 410 divided into two parts. One is for the listed company, another one is for the unlisted company. When I talk about the non-public interest entity, then what the institute has written here, disclosure is required where for 2 consecutive years, the gross annual professional fee from an audit client represent more than 40% of the total fees of the firm. And I'm talking total fees, I'm just saying total audit fees of the firm. Just repeating the same for your better understanding. Disclosure is required where for 2 consecutive years, the gross annual professional fees from an audit client represent more than 40% of the total fees of the firm. Means when you have total audit fees in the last 2 consecutive years, like take example, 31st March 2024, 31st March 2023. In both the financial years, you have the total audit fees is rupees, assume करते हैं, take it as example, 10 lakh rupees and 10 lakh rupees. And out of that 10 lakh rupees, you are taking audit fees from one of the client. Out of all client, your one client is giving rupees 5 lakh. So I'm talking about I'm talking about the non-listed company. And in the case of non-listed company, we have the percentage is 40%. So if you are charging the fees, which is more than 40%, which is more than 40% of the total audit fees, then you have to report. Whom to have to report? Earlier, the report was actually required to disclose to those charged with the governance of audit client. Now you have to report to the institute. Now you have to report to the institute. If you are aware about the notification given in the month of June in the last year, the ICI, I think in the month of June, yes, ICI is given a one format that auditor has to report whether they are receiving more than 40% or more than 20% of the audit fees from the total audit fees of the client, they have to report to the institute. So that format you have received through mail, your email ID, on your email ID, you have received that format from the ICI. So that format actually given by the Ethical Standard Board to the practicing chartered accountant and asked to the practicing chartered accountant if you have received that audit fees, which is more than 40% of the total audit fees in the case of non-listed company or 20% in the case of listed company, then you have to give report. This is the format you have to report. You have to submit after filling that information, required information to the Ethical Standard Board within the time limit period. So that was the reporting. So that is why I'm saying that disclosure is required to given to the institute within the time limit. So you will get the next same format. Of course, you will get through your email ID by the Ethical Standard Board, and you have to report. If you have a client at the non-listed company client and total audit fees is rupees 10 lakh in the last 2 consecutive years, and out of that 10 lakh, you are getting only 5 lakh rupees from one client, then you have to report in that particular format, which is given by or shared by the Ethical Standard Board, and at the time will come, you have to report to the institute. That is the requirement. That is the responsibility of the statutory auditor. After doing these type of audit, after getting the audit fees from the client, you have to mention, you have to report, you have to inform to the ICI. This is particular the responsibility. But for the public interest company, the percentage is 20%. Suppose out of that 10 lakhs, suppose I have one client that is listed company, and I'm doing the audit of that particular company, and I'm getting rupees 3 lakh as audit fees. So that is more than 20% of the 10 lakh because I'm getting 3 lakh. That is 30% of the total audit fees in the last 2 consecutive years. And I've done the audit in the last 2 consecutive years for that particular listed company, and I've charged rupees 3 lakh in 2 consecutive years. Then I have to report, I have to mention, I have to inform to the ICI in that particular format. Yes, sir, from this company, I have received this 3 lakh, which is the total 30% of the total audit fees, which I have received during the last 2 consecutive years. So this is the responsibility, right? So this is what the required under subsection 410 of the volume 1 auditor responsibility have to report to the institute about this fees related size. Okay. So there is nothing, you should not worried about how much you are getting from the client. The intention of the ICI is not, against you. Okay, you just tell me you are taking 10 lakh, you are taking 20 lakh, 30 lakh. You should not worry about that. Your duty is just to report to the institute. Okay, sir, this company was unlisted company and I'm getting 40% or more than 40% out of the total audit fees. So this is the information. If you are taking in audit fees from the listed company, then the percentage is 20%, right? Some other important areas. And now maybe you are thinking about, oh, we have to give report for every client where we are getting, where the audit fees is more than 20% or 40%. No, sir, please hold. I'm just going to give some, going to, discuss one exemptions which is available to you. So if your total audit fees in the last 2 consecutive years, what the institute has written, exemption from the applicability of the provision where the total fees received by the firm does not exceed rupees 20 lakh, rupees 20 lakh, then you are actually in exemption. Means you are getting the total audit fees from the auditing client, auditing company. In total, that is less than 20 lakhs. Then you should not comply with this clause. You should not comply with this, this fees related size compliance. You are free from this compliance. But when you are receiving audit fees more than rupees 20 lakh, then this clause will applicable. This section will applicable 410 for you. Then you have to apply. Then you have to report to the institute within the time frame, right? I think it is now clear to everyone. So what I have mentioned, 2 variants are there. One is listed company, another one is unlisted company. In the case of listed company, percentage is 20%. In the case of unlisted company, the percentage is 40%. But if you are getting total audit fees is less than 20 lakhs, no need to comply with this section 410, right? But if you are receiving more than 20 or 20 lakhs, then you have to report in the proper format given by the institute. Within the time limit, you have to report to the institute about this audit fees which you have received, which is more than 40% or 20, more than 40% or 20%. So what exactly the institute is looking for, what the government department is looking for after this reporting from your side, the department is looking for, maybe you have one major client where on which you are actually maybe dependent, maybe not. But if you are actually dependent on that particular big client from where you are getting more than 20% or 40% audit fees, maybe that is the case of compromising of integrity or compromising of objectivity or compromising of professional competence or professional behavior. So that is the importance that is want to understand by the institute or understanding by the government department. Are you giving a true and correct picture of that financial statement? Are you giving a proper reporting in that particular company case? If it is not, if it is find after later or after some time by the government department, by the institute, so the professional misconduct can be there. Suppose I'm getting a handsome amount or big amount from the client, and I'm not following the 5 fundamental principles while reporting or while giving the audit report in that particular client case. So I'm just managing with the client so that the client cannot leave me, right? For the future, for the long run, I want to save my financial income. So I'm just managing with the client. I'm not obeying with the guidelines of the institute. So what I'm doing, I don't have the professional competence. I'm not following the integrity, the fundamental principle. I'm not following the objectivity fundamental principle. So the report given by me in that particular case is actually compromise report, which is not giving a true and correct view of that financial statement of the client. So these things want to understand by the department or by the institute. After giving your report, on the basis of your report, on the basis of your information, which you will share to the institute, right? Under this 410. Now come to the next one. If we talk about, okay, some important things which I want to discuss under this, on this 410, very relevant. Uh, just a second. Okay, that's it. I've already done. That point is already I've done. Now come to the next. Next one is tech services to the audit client. So now I'm talking about subsection 604 of the volume 1. If we talk about 604, what the institute has written, tech services. So when I'm working as a statutory auditor of that particular company, and side by side, I'm giving some tech services, right? So what are those tech services? If I go to in detail, then open a 604, subsection 604, tech services. The list, if you read the para 604.3, what the institute has written in that particular paragraph, the tech services comprise a broad range of services, including activities such as, number one, the tax return preparation. Now, I'm working as a statutory auditor of the that particular private limited company or the limited company or the the auditing client, and side by side, what I'm doing, I'm also filing the tax return or preparing tax return preparation work. I'm doing that also. So what I'm doing something, the task related to the management activity, some internal working of the company, and side by side, what I'm doing, I'm enjoying the other seat as the statutory auditor of that company. So this is not expected from the statutory auditor. If you are working as a statutory auditor, then you are not supposed to be enter, or you are not supposed to be a part and parcel of the management working, or the internal audit working, or the tax consultancy working. You're not supposed to do, right? Second, tax calculation for the purpose of preparing the accounting entries. As you know that at the time of finalization of books of account or at the time of finalization of the financial statement of the company for any particular financial years, what we done actually, what we are looking for, what we have received some information from the management of the company or the finance department of that company, the closing entry, like the provision of income tax, like the provision of deferred tax. So tax calculation for the purpose of preparing the accounting entries, if we are guiding, if we are making those entry, if we are calculating that things, that is not expected from the statutory auditor. We can review those transactions, but we are not supposed to do the calculation part. We are not supposed to do any entry. Or just a couple of days before, one of the client, one of the, I would say, the member of the ICI has asked something, from my side, Mr. Singh. Suppose, as we are aware about this audit trail, Mr. Singh, I have received the data from the private limited company, small private limited company. So can I pass, some closing entry through my system in the database, in the data of that private limited company? Because sir, are you working as a statutory auditor? Kehte, yes. Because then you are not supposed to enter into these type of activities or these type of transaction through your system, because you need independence, integrity while reporting, objectivity while reporting. That is the duty of the management, to maintain the books of account. That is a major duty. If we read the independent audit report, so what the paragraph talks about, the management responsibility, the books of account, the maintaining books of account is the responsibility of the management, not the responsibility of the auditor. So any part and parcel of the books of account, like the making closing entry, that is the duty of the management. You are not supposed to pass those entry through your system in the books of account of the client. Otherwise, what will happen in the audit trail? That punching will obviously, shown in the audit trail. You have signed that balance sheet, you have passed those entry with the help of your system in the database of the company, that can be detected in the future. So we have to, take the precautions, because you are working as a statutory auditor. You are not supposed to do these type of transactions. That is the main responsibility of the management, to maintain the books of account of that particular company books, right? So you are not supposed to. So I am straightforward straightforward, I have answer to that particular member. They kindly avoid these things. Next one, the tax planning and other tax advisory services. If you are advising to the client, tax consultancy, you are giving the tax consultancy to that client. If you are giving that advice and after getting that advice, client actually implemented your advice in that particular books of account in that particular financial years related to this tax planning. When the books of account of that particular company comes to you for the audit purpose and you are doing the audit also, what is that? That is a self-review threat. You have already entered into the books of account and you are co-worker, you are working as a co-worker or co-workplace, I would say as a management person, you are working as a management person while maintaining the books of account, because tax planning is there, tax consultancy is there, you are guiding them how you are not supposed to do the audit of that particular company where you are actually involved with the management of company. So these type of consultancy you are not supposed to do. Fourth one, tax services involving valuations. Maybe you have one listed client, the listed company client, and there is of course, there is a implication of NDS, the valuation of the assets, financial assets. So that valuation may be done by you. And on the other side, you have to sign the balance sheet as the statutory auditor of the company. There is a self-review threat. You have already done the valuation of that particular asset, the value of the same asset actually enter into the financial statement at the face of balance sheet. And you are signing that balance sheet. Right? Self-review threat is there. So that balance sheet does not, give the true and correct view of the financial statement, because you are already involved in two sides, one as a statutory auditor or as a valuer. Last one, assistance in the resolution of tax dispute. As I mentioned while discussing about the advocacy threat, being a statutory auditor, you are representing that client before the tax authority for the tax dispute matter. That is advocacy threat. So in this case, in the list of tax services, I would say the tax services, in the list of tax services, the last service is related to the assistance in the resolution of this tax dispute. So we have to avoid these type of, the services which maybe we have given, maybe we are going to give, and so we have to avoid these type of things. If you are already given, then you are not supposed to do work as a statutory auditor. If you are going to do, then you have to take decision. Either work as a statutory auditor or work as a consultant. Right? Otherwise, when you will join two seat, when you will join or enjoy two seat, that can be a case of a professional misconduct. So those financial statement which you will sign at the end of this year or after doing the audit part, I would say will not give true and correct picture of the financial statement. So this is what the tax services. Let me check if something is important. Yes. Very important point given by the ICI in this, I'm just reading for your benefit. Tax return preparation services involves. What is involved? The time we have 30 minutes, so I have to complete speedily, right? So yes, tax return preparation service involve assisting client with their tax reporting obligation by drafting and compiling information, including the amount of tax due required to be submitted to the applicable tax authorities. On the second para, advising on the tax return treatment of the past transaction and responding on behalf of the audit client to the tax authority request for additional information and analysis for example, providing explanation of and technical support for the approach being taken. So what they have written, You are calculating, you're doing the calculation work, you are, advising some tax planning, these type of things, actually involved in this tax return preparation. If something is wrong, something is good, something is good for you, something is negative for you. So these type of, the suggestion and the, I would say consultancy is not expected from the statutory auditor. But we have some remedies. So what are those remedies? In the case of when the audit client that are not a public interest entity. So what the advice given? Get an example of action that might be safeguard to address such self-review threat when the audit client is not a listed company. So one thing, respected member, the present member in this webinar, I would say one thing is must be keep in your mind. When you are working as a statutory auditor, when you have been appointed as a statutory auditor of the listed company, you are not supposed to do any other activity except as a statutory auditor. Please note in your mind, keep in your mind, that is the main thing which I have just mentioned. Repeating again, if you are working as a statutory auditor of the listed company where the public interest is there, you are not supposed to do any other service or to provide any other services except as auditor, except as a statutory auditor of the company. If you provide, whether you have a separate team, if you provide whether you other consultant, which is, maybe your partner, some other platform, networking level, you're not supposed to take any directly or indirectly advantage of network or these type of things. Your report must be give true and correct view of the financial statement, integrity, objectivity, professional behavior, professional competence, and confidentiality. That 5 fundamental principle 100% required, always 100% required. But in the case of listed company, you are not supposed to enjoy 2 seats simultaneously. But when I talk about the non-listed company where the public interest is no, audit client that are not public interest entity. So what are the remedies? Using professionals who are not audit team members to perform the services. It means when you are working as a statutory auditor for the non-listed company, then you can take the advantage of professionals who are actually not involved in the audit team. As per my understanding or as per discussion with the senior member, so what the interpretation comes to our mind, if we are running a partnership firm, so one of the partners, suppose myself as a Jagjit Singh, so I'm just doing the audit work. So I'm doing the audit of this non-listed companies, and I'm not supposed to do any other play a role in other any activity. I can play only the role of statutory auditor. But my other partners, my other 4 partners, other 5 partners, other 10 partners, other 20 partners, they are running, they are managing, they are actually in charge of particular area like international taxation, like stock checking, right? Like income tax litigation, like GST litigation. And their team and the member of their team, actually, they should not be involved with my team or with me as a audit team member. If the big chartered firms, I would say top 20 chartered firms, top 50 chartered firms, if they are maintaining proper department in their offices, whether at a same office, whether at a different locations, in the case of non-listed company, as per my understanding or as per the discussion with the senior member of the institute, of course, the practicing chartered accountant senior one, the interpretation is just like that, if you can take the benefit of the other partner, like your other partners is only looking GST matter, you are working as a statutory auditor. So if you are looking for a, like some expert advice from the GST auditor, then you can take the advantage of your partner, the partner who is actually looking GST area. That is only available as per my understanding, as per the interpretation which I can understand, which I have understood. That is only in the case of non-listed company. But make sure before applying this, must read this, the information available on the ICI website, Ethical Standard Board website. Must read again, right? So only in the case of non-listed company case, you can advise of the second partner who's actually the in charge of a different department. Maybe he's in charge of a international taxation, maybe insolvency professional, maybe the bank audit, maybe the GST audit, maybe the income tax, litigation, right? I'm working as a statutory auditor, but if my client is a listed company, then my any partner of the firm or directly or indirectly cannot or should not involve with me or cannot take the advantage of other partner if I'm just going to sign the financial statement of the listed company as a statutory auditor. Then in that case, in the listed company case, the other professional, which should not be belongs to my firm, which should not be belongs to my network, that should be independent other firm, can provide the services to that audit client. I think that is clear. So this is the only advice. This is the only, the area which is given where you can save your skin, where you can, maintain. Otherwise, the small practicing chartered accountant, they are much worried about this. Sir, we are filing the return, we are filing income tax return, we are filing GST return. So how to manage? Right. So in that case, if you are working as a statutory auditor of the private limited company, which is not a listed company, so you can take the advantage of other partner if your other partner is specialized person for that particular area and he's a separate in charge of a separate department. Only in that case. If you are running a proprietorship firm, then you are not supposed to. Then you have to take the advantage of the other proprietorship firms, right? As per my understanding. Now comes to next. Now, this 260 and 360, very big one, very lengthy, very detailed. I'm just taking the main points because the time constraint is there. I have to at least pick two later judgment for the understanding of the client. So 260. When we talk about this no CLAR, the responding to the no compliance with the law and regulation, no CLAR. In short, we can say the no CLAR abbreviation of this non-compliance with law and regulations applicable to the professional accountant in service. Then the section 260 apply of volume 1. So what 260 says? Applicable to, earlier the provision was all employees. Now the provision after amendment implemented from 1st October 2022. What is the new one? Applicable to senior professional accountant in the service being employees of a listed entities. Means this section 260 only apply to the apply for the senior professional accountant. Means the member, those are member of the ICI, very senior one, the key managerial personnel of the big industry, or they are in the service being employee of the listed entities. It means it is only applicable for the listed company employees. Okay. Next. It is further explained that the senior professional accountant referred to the key managerial personnel. Now we have to understand who is key managerial personnel. The person who has the power to take the decision in that particular company, whether that decision related to the policy, whether that decision related to the financial, whether that decision related to production or anything, but must have the power to take decision. That is why they call the key managerial personnel. Those are actually responsible to manage the activity of the company at large. Right? So section 260 is only applicable for the employees in the service of the listed company. Now come to 360. Now 360 talks about applicable to the professional accountant in public practice, like me, like you, maybe out of the present this member in this webinar on this meeting, out of them, maybe some of are actually practicing chartered accountant, maybe some of working in the industry. So section 360 apply to the public practitioner, the applicable to audit engagement of the entity, the share of which are listed on the recognized stock exchange. This is the condition. The auditor, those are actually doing the stat audit of the company, but the company must be, the share of the company must be registered with the recognized stock exchange in India. That is the condition. Share must be registered in the recognized stock exchange in India. If it is outside India, 360 never apply. Another condition, in India and have net worth of rupees 250 crores of rupees or more. In the condition, there is a word and. And means one condition is the share of that. The company should be registered with the recognized stock exchange of in India. Second condition, have net worth of rupees 250 crores or more. It means both the condition required. Then the implication of 360 will be applicable. For whom? For the practicing chartered accountant in public. Right? So listed, share, recognized stock exchange, and net worth of rupees 250 or more. Applicability of section 360 will subsequently be extended to all listed entities at the date to be notified later. Right? So this is mentioned. If we talk about this 360, audit and audit engagement shall means a reasonable assurance engagement. Audit engagement shall means a reasonable assurance engagement in which a professional accountant in public practice express an opinion whether financial statement, because as a statutory auditor, what we are doing, we are giving our opinion on the financial statement, give a true and fair or the correct view in accordance with the applicable financial reporting framework. If you are giving any opinion, your professional opinion on any document, like the financial statement, like other certificate, that is called the audit engagement, right? Audit and audit engagement. So section 360 apply. If that document is related to the listed company and the share of that listed company registered in the recognized stock exchange only in India, and the net worth of that listed company is 250 crore or more than that, then this section 360 will be applied. So what we have to do, we have to keep in mind section 260 for the industry person, section 360 for the practicing chartered accountant. That is in the case of no clerk. And no clerk, the main section of this no clerk is section 260 and 360. What we have discussed, three provision, major provision. Earlier, these three words differed, but implemented or of course, we have to follow now from the date of 1st October 2022. That is what responsibility responding to the non-compliance with the law and regulation, that is no CLAR section 360 or 260, and fees related size, that is section 410, and tax services to the audited client, that is 604. So these three major provisions I have discussed, not exactly in detail due to this time constraint, but yes, I have tried my level best. Now come to the recent decision. Very important. When I'm talking about, the disciplinary directorate or the disciplinary committee, we must refer to section. One section is related to section 20, that is related to removal from the register, means the name of the practicing chartered accountant, removal from the register of the member register of ICI. Second one is section 21 related to disciplinary directorate. That section is the big one. Under this section, we have section 21A, 21B, capital A, capital B, 21 capital C, 21 capital D. Then we have 22, some other sections, but 20 and 21 must read. That is my humble request to the present member. Please must read these two sections, 20 and 21, and advise and request to the other members must read this section. That is very, very important to understand how the institute works actually in the disciplinary matters, right? Now, the latest judgment. I will not take the name of the chartered accountant, the firm, actually, the guilty given by the ICI, because that is my, understanding. We should not disclose. But if you want to understand actually want to know the name of that chartered firm, then you can download these latest judgment from the disciplinary, the page of disciplinary committee. You can download it, the available latest judgment given by the disciplinary committee or the disciplinary directorate, latest judgment. So now I'm talking about the judgment given by the disciplinary committees, and the date is actually 10th April 2024. In this case, what happened? I'm just explaining you what happened. In the market, one company was there, and that company was dealing in real estate business, actually involved in this real estate business, like buying this plot and the construction part and of the building and residential house. These type of the transaction, this type of the nature of business was related to that limited company. And this company is basically, yes. Then one of the director, the person who is actually the complaint to the ICI about the CEO of the company and about the statutory auditor of the company in this recent judgment. The case is actually related to what? The fraud done by the statutory auditor, the fraud done by one of the CEO of that company. And CEO is also, on the other side, he's also a chartered accountant, a member of ICI, but he's not a practicing chartered accountant. He was not a practicing chartered accountant. He was working with the company as a CEO. So what the CEO and the statutory auditor have done in this particular case, at the backside, CEO and the statutory auditor both are working together, and they have some malified intention in their mind. They want to do some fraud with the company. So one of the director of that particular company, the person who has actually complained against the CEO and against the statutory auditor of the company, and one of the other person is actually involved, like the assistant of the chartered accountant, assistant of the statutory auditor, who was actually working in the company and was maintaining the books of account of the company. And while maintaining the books of account of the company, has done some transaction, which is approximately 70 lakhs, that is actually fraud done by the all three person, the CEO, the statutory auditor, and of course, the assistant of the statutory auditor, right? So what they have done, and I would say the finding, just a second. The director of the company, the person, the complaint, the complainant basically had invested rupees 2.62 crores in this real estate business, and the same was expected from the CEO, the one of the basically, the member of ICI, the qualified chartered accountant, but not as a practicing, as an employee of that company, as a CEO of that particular company, and was the equivalent partner in this particular business transaction. So 2.62 crores invested by the complainant in this business, and the same is expected from the other CEO. And the CEO, he was working with the respondent CA, like the person against whom the complaint was filed before the institute, the statutory auditor. So what the statutory auditor has done, the forgery of the document, forgery with the document, the forged document submitted by that chartered accountant. How it is, happened. So I'm just and removed two directors actually. One, the complainant, the main director of that particular company, after using the DSC of that director, unauthorized use of that DSC, digital signature, and put that signature and file the resignation of that particular director. Not only that director, even the wife of that director, one of another director in that company, his wife of the complainant, she was also working in this company as a director, but after misutilization, after I would say the unauthorized use of the DSC, actually filed the ROC form given the resignation, filed the resignation of both the directors and removed from this private company. So that was the cheating. Misappropriation of the funds, as I mentioned, the 7 crores misappropriation of the fund, 70 lakhs, the transaction given in the books of account. That is, of course, it's a team efforts, but with the malified intention. So what the charge, mentioned by the disciplinary committee or the disciplinary, I would say, yes. Number 1, against the aforesaid background, the following was the alleged against the respondent. Number 1, the respondent. When I will say respondent, it means the person against whom the complaint was filed or the guilty was given by the committee. The respondent was involved in the large scale evasion of tax revenue. Even what he has done while working as a statutory auditor of the company, he took the money from the director into his saving account, and he has mentioned to the director that I will deposit the tax on behalf of your company to the central government. Even he has given the copy of that deposited challan to the particular director of the company. But those challan, when the client, when the, I would say the complainant, cross-check with the income tax department and request to the income tax department to verify those challan, then what the income tax department has mentioned, these challan never deposited. This challan is never deposited as a amount of tax in the account of central government as a direct tax. So 4 challan given, 4 documents submitted. Another things, even the copy of returns, the income tax return, the given by the statutory auditor after filing this income tax return, and the copy of the same given to the director of the company, those income tax returns is actually not cross verified with the portal of the income tax department. So these type of things, they're done by, of course, with the malified intention. I would say not all the chartered accountant work like this. Some of them, and that is happening in all the profession. If I talk about other profession, I will not take the name of other profession, but yes, it is happening everywhere in the world. It's not only happening in this CA profession; it is happening everywhere. If we talk about the local public, if we talk about any state, if we talk about any country, talk about any profession, any business, everything is happening everywhere. So, but yes, some of the person, the little bit percentage of, the profession, they are actually working with the malified intention to, give a big loss to the other person. And of course, they are not actually maintaining the positive image of the ICI. So I would request to those chartered accountants, those are doing these type of things, don't do these type of things. Please maintain your positive image and please help to image and enlarge the positive image. Always try to enlarge the positive image of the ICI. When the image of the ICI will, enhance, obviously, our own as a practicing chartered accountant, as a member of ICI, our image will automatically enhance, right? Next. So what the findings, that I have already told you, these type of, the charge, of course, given by this committee. Uh, One thing is important, which I want to just mention, the conclusion. A detailed visual of submissions of the document and the record, especially the funds movement between the complainant and the respondent, and the connect the respondent firm and auditing the accounts of the company and providing other ancillary services and having regard to the preponderance of the probability. The board was of the view that role of the respondent means the chartered accountant against whom the complaint is filed, the respondent in the alleged provisioning of the forged and fabricated acknowledgement receipt of the payment of income tax or filing the income tax return of the complainant, which depict not only payment of income tax but also filing income tax return for the financial year so and so, cannot be ruled out. In view of the above, the same board held the respondent guilty in respect of the charge alleged. In the conclusion, in the considered opinion of the board, the respondent is guilty of other misconduct, when we talk about other misconduct, so these other misconduct can be, referred for the, the court matter in before the court actually. So it doesn't mean, okay, after getting a, the order from this disciplinary committee, so this will not be moved further. That can be moved further under other section, IPC section, High Court, Supreme Court. So that matter can be go beyond that. So other misconduct falling within the meaning of item 2 of the part 4 of the first schedule. As I mentioned at the initial stage of my webinar when I started, so I mentioned other misconduct in the schedule 1 and schedule 2. So those other misconducts are very crucial, very crucial. So this is the order given by, of course, the disciplinary committee. One another case. Rashmi ji, want to say anything?
Sir, we have received few questions. Can I
Just
take?
a second. I'm just taking a small judgment, a latest judgment, and after that I will take the question. I will not take because I've only decided 5 letters of judgment to discuss and for the benefit of the present member, but with the time limit. So the second one I have to mention, and then I will take the questions.
Okay, sir, sure, sir.
Thank you. Another judgment, the date of that judgment is 17th March 2023. So this judgment is related to clause 8 and clause 9. As I mentioned earlier, the clause 8 and clause 9 is very, very important. So what they have mentioned, that after finding, as per the finding of the board and contained in its report with regards to the first allegation, the board held that the communication has to be done with the previous auditor. Most of the cases, of course, in the disciplinary committee is related to this clause 8 and clause 9, as I mentioned earlier, and the clause 7 of the second schedule that is related to the negligence of the cases. So prior to acceptance means when we are going to be appointed as a statutory auditor, the first thing which we should, keep in mind, we have to communicate with the previous auditor. When we talk to the previous auditor, when we communicate to the previous auditor, what is important? What is important? The information shared by the reply given by the previous auditor, the information shared by the previous auditor, whether through this phone call or through this email. But I would say a written letter must be given to the previous auditor, should be reached to the previous auditor for proper communication. So this is required. It should not be. It should not be verbal. It should not be on phone, because you are not recording that call and you don't have any evidence. Suppose in the future there may be a misconduct against you and you are not expected to prove that things that I have already communicated with the previous auditor. So these type of communication must be done with the proper receiving, with the proper, your speed post receipt, or I would say registered AD through this communication, right? So in this case, the auditor, of course, the guilty person, the guilty chartered accountant actually not done this communication with the previous auditor. And the second thing, non-compliance with the company 2013. As I mentioned, section 141 of the company 2013 is actually related to what? Eligibility of the statutory auditor. So eligibility, you have to give that certificate to the client, the private limited company or the listed company. Those are actually registered under company 2013. You have to say something about you and given a written letter to that company that I'm eligible to appoint as a statutory auditor under section 141 of the company 2013, and you are not doing these type of things. And what is important in this, the case study, the chartered accountant had signed the balance sheet first, and acceptance as a statutory auditor appointed by the companies later on. So what is this thing? Non-compliance. What are these things? Negligence. So these type of things must be keep in mind while doing audit of any client, whether company, whether non-company, must communicate with the previous auditor. If it is the case of a company, if your client is private limited company or other company under company 2013, must comply with the Company Act clause 2013, like the Section 140, Section 141, Section 147, Section 143. Some other sections are, of course, relevant section. We have to follow those sections. So in this case, this chartered accountant does not, comply with this company 2013 relevant section and the clause 8 of the communication with the previous auditor. So what the institute has said, the responded firm accepted an appointment as his auditor of such and such company for the particular year without first communicating with the complainant firm in writing. In writing. Please mind this word, in writing. The respondent accepted the audit without first ascertaining whether the requirement of the section 139, 140 of the company 2013 has been duly complied with by the company. So what he has done, what the guilty person has done, contradiction, non-compliance, negligence, these type of things has done. In the conclusion, the committee has said, thus in conclusion, in the consideration opinion of the board, the respondent is guilty of professional misconduct falling within the meaning of item, yani clause 8 and clause 9 of the part 1 of the first schedule of the Chartered Accountant Act 1949. So at the initial stage, as Anush sir has mentioned about the two schedules, so that is why I'm saying those two schedules are equally important. The recent decision of the central council member equally important. The clarification from the central council member equally important. The guidelines and the rules and regulation from the the regulatory जो regulators होते हैं. So those regulators guidelines are equally important. Latest judgment we have to follow. Court order, high court order, Supreme Court order. So these all are part and parcel of this code of ethics. So we have to follow each and everything because the time constraint is there. So that is why what I have done, I've tried to level my best for this particular topic. So over to Rashmiji for the queries asked by
Uh,
the members.
Thank you so much, sir, for the wonderful session. So we have received few queries. One query is whether a full-time employee CA is a liable for professional misconduct in discharge of his duties.
Full-time employee.
Yes, sir. Full-time employee CA is liable for.
Of course. I have just mentioned, if that person, one thing is important. 5 fundamental principle is applicable for all the chartered accountant. It is not applicable for the practicing chartered accountant. It is applicable for even the member of the institute is applicable, right? The professional behavior. Sometimes that person is not a practicing chartered accountant and, fighting with the society person. Then society, when, it's come to the knowledge of the society members, if this person is a chartered accountant, then that society members go against that chartered accountant, other misconduct section, right? So they have to follow. They have to follow whether they are in industry. So are most of the chartered accountant working with the institute, working with the other institute, CS Institute, MC Institute, बहुत सारी जगह में, all different department, government sector, they are working as an IAS, they are working as an IPS, So they are actually following this code of ethics. It doesn't mean that this is only applicable for the practicing chartered accountant. It is applicable for all the qualified chartered accountant. Yes, ma'am.
So second is, can we take an annual independence declaration from the staff of firm also?
Of course, we can take. If we study this, peer review guidelines. So what we are doing, we are taking the declaration from the partners of the firm. Okay, your family member is working. Is your family member working in that particular bank where we have received, of course, this invitation to appoint as a statutory auditor or as a revenue auditor. So we have to take the declaration from the partners. We have to take the declaration from the staff member. Maybe, sometimes, what happened. Suppose one of the staff, Mr. A, is working with me as a staff. And his father is already working in that bank as a manager. And I'm going there as a concurrent auditor. So I have to take the declaration. Maybe my staff member is working with his father, the father who is working as a bank manager. So some, comfort is there. There may be some, this threat would be there. Self-interest threat can be there. Self-review threat can be there. Other threat can be there. So we have to take the declaration even from the staff member, even they are not a chartered accountant, we have to take.
Okay, so the next question is, the relative of an auditor allowed to do accounting of the company whose company audit is being done by the auditor?
Now, what is happening in this case, Rashmiji? One of the relative where my self-interest can be there. As I mentioned my earlier example during my deliberation. So when I'm just trying to maintain that relation with my relative, I'm worried about that relation. I'm not worried about the compliance of the ICI. So I'm just maintaining that relation. So the duty of the chartered accountant, the duty of the statutory auditor should be first to comply with the ICI guidelines. First with our main code of ethics. Second would be the relative. So if as per the definition of AS 18, related party disclosure, if one of the family member is maintaining the books of account or working with my audit client, then I have to give the disclosure properly if I'm going to sign. If I've signed that financial statement, I have to give the disclosure. I have to give the declaration. Or maybe if there is any proper threat that can be go against me, then I have to resign from the post of as a statutory auditor. So that is required.
Okay, so thank you, sir. Next question, last question. Whether act done in personal capacity can also come in the ambit of disciplinary procedure.
Yes, of course. But case to case, it can be depend, I would say. Sometimes the person is doing something, in the individual capacity, but that impact is giving a negative impact in the image of ICI. That giving sometimes, the negative image. Suppose some person, using abusing language at the crossing of, I would say, on the red light, he was standing on the red light, and after brings, the wine, after having the wine, no, he is just abusing to the ICI, abusing to any other profession. So even that person is doing something, in his personal capacity, but what he is doing, he just, what the conduct of that person is doing, that is decreasing the value of the ICI, that is decreasing the value of profession. If other person know that the person is a chartered accountant, what he's doing, he's a chartered accountant, he should not be he's not supposed to do these type of things, because the chartered accountant is a very, very, I would say, very respectable profession. When I say, I'm a chartered accountant in front of other person, so the other person, give respect to me. Oh, you are a chartered accountant, you are so gentleman. So this is what we have to maintain, the positive image of the ICI and of course the CA. That is our parents' body. Yes, ma'am.
That's it, sir. These are the only questions, sir.
Thank you, ma'am. Thank you. Maybe the chairman is there, so we have to conclude. So
Yes.
मैं तो thank you बोलूँगा last में, in the last concluding remark में. So what I will say, so thank you to all the ethical standard board committee members, जो ethical standard board, the complete team of the ethical standard board of ICI for inviting me and giving me such a wonderful opportunity, because at this platform, speak on a different topic or speak on this topic is very difficult, but it's an honor for me that you have given this such a wonderful opportunity. Thanks to the chairman, thanks to the vice chairman of this ethical standard board, all the technical support member, the secretary, of course, Ashish ji, and you as assistant secretary, Rashmi ji, and all other person, those are actually making this meeting or webinar successful at a support person. So thank you all, and thank you all the present member listening me with your proper, involvement. Thank you. Thank you all.
The informative session.
Thank you, sir.
Thank you. Thank you.
Yes, and